So, for those of you guys that follow me or know me, you know that I run multiple real estate funds, I've raised capital for some time, and admittedly, I found these two not that long ago, and it has been very instrumental for the growth of my ability to raise capital. I frankly did not understand self-directed IRAs or that they were even a thing. And once I understood it, thank God I had a friend like Greg that like I could actually learn from somebody that I knew. It completely changed my ability to raise capital. And I'm gonna let Greg kind of explain to you why, but it's one of the easiest places in the world to lean on for people who want to invest in projects with you. And the other thing, I thought it was this crazy huge mountain I had to climb. I had to be, extremely versed in it. And I had to work with a custodian. It was this long, drawn out process. And working with Greg's team, it's not. In fact, I've got multiple people. I run a huge team at EXP. I got multiple EXP executives have moved over their old self or 401ks to invest with me through Greg's company. Then through the years, I've done different structures of raising money and funds, different type of syndications, fund to fund model. And ironically, I met Stella and she was telling me about her product. And I was like, this is just way too good to be true. None of this makes any sense. And quickly got to become really good friends with her. Um, had the privilege of coaching her and helping her get her speaker presence just into like Jedi level on stage. And what was really cool was she went through a raise that she was unsuccessful with, and she saw that there was a problem in the money raising world, which I would completely agree with. And so she created this platform called Fractional that basically, long story short, gets you around all the red tape and all the nonsense of running a fund. Again, nothing against running funds because I run them. But I raised 750,000 on Stella's platform in December. I'm well into the seven figures with Greg's team. And it was super easy working with Stella. It was super easy working with her platform. And I didn't have to go through the traditional things that I have to go through raising a fund. Now, if you're on here, more than likely you are in the real estate investment space, the retail space, whatever the case is, but you are in a space where you need to raise money for capital for different projects. One of the things I will tell you guys and gals on the call is the growth that I've had in my investment business is directly tied to my ability to raise capital. And when I was able to figure that out, what started happening is I actually less and less started looking for deals. Deals started coming to me. So in Q4 of 2025, we settled about 100 million in projects, and almost every single one of those deals was brought to me. And in Q1, I've got multiple mobile home parks I'm settling, RV parks, large commercial assets. Most of these deals were brought to me because people know that we could access the capital. And I've got multiple deals that I'm working where we're about to start new clubs with Stella to raise the money. And multiple people who are going in these deals, I already have them with Greg move their money over to self-directed so they can invest with us. So the reason why I wanted to put these two together today and talk to you guys is it's kind of almost like the perfect one-two punch. And it's kind of almost like literal the cheat code for raising money. And I think a lot of people overcomplicate this and make this super, super complex. And these are two really like easy things to do that can really help the growth and trajectory of your ability to raise capital and your ability to grow your real estate investment business. Because look, capital is the lifeblood of your growth. And here's the thing. I used to also be scared of big deals because we always worry about we get a big deal. How in the hell are we going to finance it? How are we going to put this together? I honestly have no fear of a deal anymore, like at all. In November of 2025, I settled a $63 million, not just me, but with a group of people. We bought a $63 million apartment complex. Years ago, I would have been scared of that. Now, because of my ability to raise capital using tools like Stella, using tools like Greg at Horizon Trust, now I'm not scared of any deal. If the deal pencils and it makes sense, I feel that I can always go raise the capital. And once you get on that side of the equation, it starts to look really, really different because then you're in control of the deals. And that's when people kind of bird dog and start bringing you deals because look, I always say this, good deals find money, which means if you're the money, the good deals are going to come find you. And with both of these tools in your toolbox, it'll really change what you can do. So I brought both of them on here to explain because I use both of them and both of them have changed my ability to raise capital. So with that being said, Greg, if you want to tell us a little bit about self-directed, and then we'll let Stella tell us about fractional.
Yeah. So first, well, thanks, Brandon and Stella. I will tell you, I don't think I ever told you this, Stella. So, Brandon, you are one of the best connectors I've ever met. Not if, maybe the best. I don't want to tell you that yet, but I think I think so. But you bring such good people together, and I would say, when you introduced me to Stella. I had raised before I owned a trust company in my first 12 or 13 years, almost 600 million, a little over, actually, it was a little over 600 million in different syndications, Reg Ds, Reg As. And so I felt like, I've been around the world as far as raising money. So when he told me about Stella and fractional, I was like, there's no way. And so before I talk about self-directing, I just want to share and forgive me, but I do I had to do my due diligence. I sent your information to two different attorneys, my SEC attorney I've used for 20 years. And his response kind of bothered me. Sorry, I'm totally going a different direction for a second. He was like, "Yes, you can do it. You just got to stay within inside that box." And I was like, "Well, why didn't you tell me about that box?" Like, I was like, that would have been nice to know, like, 100,000 or $200,000 ago when I was doing funds, right? So, anyways, Stella, it's great. It's been great working with you and a lot of your clients, and so thanks for having me. So, as far as self-directed goes, my background was raising a lot of money for funds, hard money lending, for really all through my 20s and 30s, and what I had found when I was raising money back in those days before I owned a trust company is that the lowest hanging fruit was retirement funds. People were fed up with retirement accounts, the returns they were getting, what their advisor was telling them. And so that's where I raised probably 80% of the 600 million came from retirement accounts. I was referring people to other trust companies so they'd invest in my fund. And I know, Stella, I'll let you give your numbers. You've way faster than what it took me. I think 13 years before I got to about 600 million in these different deals and syndications and Reg A's and Reg D's. But what I had found is people were looking for something different than the stock market. And so, as I referred literally thousands of investors to different trust companies, I had found that these trust companies were slow. Their service was terrible. And
Mhm.
so, because they were slow, they thought my investment was bad. And I was losing accounts, losing investors. And so I was like, I got to fix this. So in 2009, I started a trust company called Horizon Trust Company. That is all I do now. I don't raise money for deals. I now invest personally in deals, but I don't have any funds. I now actually, my client are probably mostly everyone here listening today are people that are trying to raise money for their deals and or their businesses, but by using other people's funds, typically IRAs or old 401ks. And so our company's been around 15 years. We got a little like 1.3 billion in assets that we hold, about 9,000 clients. And we are the best as far as service goes. We hold your hand through the process. More importantly, I would say, because you're our client, we held all of your clients and through the process. When Brandon sends us a text, he's the only one that will still continue to send me a text, but I'll still take them and says, "Hey, so and so needs to open up an account. They're going in, my next whatever, my next deal." Uh, However the lead comes in to my team or myself, we make sure. Please don't be via text, but we will make sure that your client gets their IRA set up and then ready to then deploy into an investment. And I know, the biggest reason why probably that it makes sense for me to talk about this subject, not only that we own it in the trust company and we do it every single day, the opportunity, which is I think what Brandon also is referencing here, is I think the jaw dropping information that I hope if you don't know, you should know, which is there's over 105 million IRAs in the United States that have over $20 trillion. And only 5% of Americans even self direct. The other 95% don't. And I'm not here to say that they should. I would say probably only another 10% should be self directing because it is not for everybody. But you take 10% of 105 million, right? So what we're talking about 10, 12 million accounts, they're going to have a couple $1 trillion in them. These are the people most likely that can be investing with you in your deals or in your business. And and the other thing I'll share with you is it is because I said it's 105 million, that represents about 40% of adults. So almost everybody, one out of every two or three individuals that you know, especially as you get older, have one of these type of retirement accounts, have an old 401k. And what I think is unique as well, because it's been around for over 40 years. It's still the wild, wild west, in my opinion, probably by design. Most financial firms and brokerages aren't advertising, hey, you can move your IRA away from me to go invest in this syndication deal or this fractional, right? It's not something they promote. But out of respect to them, I actually would say this method of investing is not for an individual to move all of their money into a deal. Uh, what's great about self-directing is if you have a client or yourself, if you have a retirement account or a client has one, they can test it out. They can move over. I know, Brendan, I think one of your last deals was a minimum of $25,000. Individual can take of their 100 or $200,000 at Charles Schwab, let's say, and leave 150 there and move 50 over into a self-directed IRA where there's no taxes on the transfer, and it continues to grow tax-free. And so the opportunity as far as the
Ring
amount.
tight.
Oh, I missed somebody here. Oh, sorry. The opportunity as far as, and we'll go to questions in a second. I don't know if someone's asking a question or if they just went on mute. Um, the opportunity for those that are looking to raise dollars is all around you. And that's what I learned in my early 20s when I was trying to raise dollars. I wish I would have known Stella and Brandon back then. But obviously now you have that and you have the resources. So I think that's why it goes, hand in hand as far as finding the dollars and finding the legal structure to make sure you do it the right way. And so for me, from my perspective, what we do at Horizon is just that: is once you identify a client with an IRA or an old 401k, which means it's a 401k they're no longer contributing to where they work at, those type of accounts qualify to self-direct to invest in. The lead way over to Stella here. So that's what we
Yeah,
do. And before I
Greg,
do that, Brandon, is there something you want me to hit on?
well, what I want to give you guys is I'm going to give you context of real world for both of these. So for instance, we had a fractional club in December. I'm telling you from memory, but I think I had three or four people that reached out to me that saw that club and said, "Hey, Brandon, I want to come in, but my cash is a little tight right now." First question I asked, "Do you have an old 401k?" "Yes, I do." "I didn't know I could use it." "Yes, you can." "Okay. Well, timing wise, will I have enough time to get in?" "You will, because I'm going to take you to Greg," right? So in real world, for those of you that are listening that maybe you're not super versed on this, someone calls me today and says, "Brandon, I want to invest with you." The first question I always ask them is, "Do you have an old 401k?" "Oh yeah, I do." "Do you know how much you have in it?" Not really, but I think it's, 100,000. "Well, cool. The minimum investment on this is 50. Would you be willing to look at putting 50 in from your old 401k?" Because then it's not actual cash out of their pocket today, right? And then the other thing, to Greg's point, they make it super easy because then I literally turn it over to them and they handle the entire process of getting that all set up. So then the consumer or the potential investor is not freaked out or has fear of like, how long is this going to take? Is this going to be difficult? So real world, from my own experience, send it over to them. It's a week or two process. Then they're in my deal, and then as fractional as an example too, literally just had this happen in December. Send them over to Greg. Greg gets them set up. Then they're live into the fractional deal in the same freaking month. Like it makes it so easy. And if you think about raising money or getting people to invest in deals, the old 401k is very easy because it's not like they're putting liquid cash out of their pocket today. So just from my experience, I wanted you guys to kind of know because like I've actually done this multiple times.
And I'll say one more thing on that. I mean, the best example I use, and the reason why I raised so much money back in the day, is because just think about it from your perspective. When you either your perspective or when you're talking to your potential investors, if you've got a deal and they're going to put $100,000 in it, and they've got to wire you from their checking account or savings account,
Mhm.
or they have an old 401k that they can't touch anyways for 10 years because they're not old enough. And if they were to put that $100,000 with you, and let's say your deal, because I feel like almost all deals go a little bit long, right? They don't go perfectly, especially in real estate. They go a little bit long. Well, if someone wires you $100,000 and you have a 12-month note, most likely they're calling you. Hey, it's been 12 months or 11 months. I need my money back next month. When it's their IRA, they have seen, they're a lot more patient with you. And so that's been really nice as well from an IRA perspective. So I mean, Brandon, you're right. It is all around you, and it's something you should be asking all of the time. Do you have an IRA or an old 401k? Are you happy with it? Would you like to invest in something different that maybe they might understand much better? Like for me, I understand real estate, so I enjoy investing in real estate. So that's what we do at Horizon Trust Company, and I know we'll go to questions and stuff here after Stella goes here as well. But thanks, Brennan.
Yeah, I just want to add in, ever since we've had our partnership with Horizon, we help so many operators start investment clubs and raise capital, and we've made just this adjustment of, even in their investment presentations, right? When they're giving a webinar and they've got a room full of potential investors, just adding in, one slide or just even bring up in the conversation, right? If you've got an old 401k, where is that being invested? Is that doing any work for you? And, they're listening to the entire presentation of this operator and this, amazing opportunity. And they're really excited, right? They want to jump in, and clearly in their head, they know this money is going to work a lot harder working with this operator than whatever is happening in their retirement account. So just, prompting that as an idea, it really seeds the activation energy that's needed. And then now you have a tool that allows you to unlock that retirement fund into your deal. And I've literally seen people on the platform be able to raise, double the amount of money just because of starting this conversation. So I think 2026, if capital raising is on the roadmap, it's all about how to unlock and untap every single part of your audience and the capital that you have access to, right? Retirement money, that's a huge one. And with fractional, where we really come in is allowing you to tap into both the accredited and unaccredited side of your network without all the crazy red tape that comes with a traditional syndication or a fund. And as Brandon shared, I got started in this whole space because I got extremely burned my first time raising capital. I was looking to do $1 million raise. I found this portfolio of duplexes, and you go to your securities attorney and they tell you the standard set of things, right? It's like you gotta go make a 506B or you make a 506C. And then I'm waiting around for, close to a month getting these crazy 100-page documents that I can barely read, let alone my investors, right? And then after all that's done, they're like, no marketing, you can't post on social media, you can't tell people you're raising money. And then it's like, okay, your uncle, sorry, not accredited, they can't invest with you, your cousin, they're also out. So I literally had a spreadsheet of all my family, friends, people that follow me on, Facebook and Instagram say that they want to invest with me. And that was actually over $1 million in soft commitments. And pretty much half of them were not qualified because they were unaccredited. So I ended up losing that deal. I spent already 30 grand with the securities attorney. I put 25K EMD down. So all that went completely down the drain. I got like absolutely obliterated in my very first raise. And, I thought never again, right? Like there has to be a better way of doing this. And that's how we discovered this legal structure called an investment club, which is actually not considered a security at all by the SEC. And this is really where all the magic happens. So the way that an investment club works, it starts out almost kind of like an open fund where you have some sort of criteria you set, right? So, if you're someone that's doing equity deals, that is pretty much your buy box, right? Like, let's say some of you here, you guys do, RV parks, multifamily, single family co-living, whatever it is, right? You likely already have a buy box for the types of deals you're looking for. So that buy box becomes your criteria, and you tell people, hey, who wants to go buy, co-living properties with me out in Atlanta? My target is it has to be, 12% cash on cash at least, whatever it is, right? That's your criteria. And then you can form an investment club around this and just bring in anyone from your network that is interested and passionate about doing this exact same thing. And that's how you raise the money without, crazy filings, PPMs, all those things. And the reason why this structure is not considered a security is because after you've found your investors, after you've raised the money, what you then do is bring deals, right? You've got the deal flow. You bring deals that fit this buy box back to your club, and you tell your investors, hey, I found 123 Main Street. I think it fits our buy box because of XYZ reasons. What do you guys think? Do you guys agree? And that kind of experience, I actually think it builds so much more trust and collaboration. And, in reality, right? Like people are going to approve as long as, everything obviously fits because they trust your leadership. They want to work with you and they want their funds to be deployed, right? Like no one wants to have their money just sitting around not doing any work for them. So everyone is incentivized as a club to make decisions very quickly. And because your investors are now part of this, collaboration process, this counts as active participation in the eyes of the SEC. And that's why an investment club is not considered as a security and why you don't have to go through all the crazy, regulations and restrictions that apply. So, Brandon, I'll let you talk about this, but you've got so many people in your network and you have a fund, right? And traditionally they've been blocked out of participating in their fund because they're not accredited. And you wanted to provide a learn and earn experience for all those people that wanted to build wealth with you, right? So I know you had a really amazing win with the Mailbox Money Club. Do you want to talk a little bit more about that?
Yeah, so and for real world too, what we did is so I run a hard money lending company too. It's one of the many kind of verticals in our business. And so, we've got a big off market side. So Greg comes to me, he's a fix and flipper. He buys a off market property from me, but then he comes to me to get a loan too. And so we have basically different structures where we do hard money lending. Well, I saw this as a very easy way to raise money and put it already in our thesis of hard money lending. So to Stella's point, kind of what I did was, I had loans that were coming up that I knew needed to be funded. It was about $750,000. I thought I could raise that pretty quick. So raised it on the platform in a matter of very quick. And then I already had the deal. So to her point of you send it to the club and vote on it, had the deals, sent it to the club. They voted on it in 24 hours. I think Stella's team deployed the capital to me within the next day or two. So it was super fast. And the cool thing about this was in the fund structure, there's certain things that I can and can't do as far as my advertising. And I never take less than 50,000. On fractional, we tried 25 because I could take non-accredited investors. And what was actually cool is I had multiple people who invested with us who never could have invested with us prior. And that's led to they're now, I'm a sales and marketing guy. Once you're in my funnel, like you're in my funnel forever, right? Like I'm going to treat you right. And we're probably going to continue to do business with each other. So I had multiple people come into that investment club that had never invested with me before, had saw me on social media, had saw me speak on stage, followed me on social media, whatever the case is. But there was never an offering that fit them because of the investment size or because they had to be accredited. So the cool thing about this was I was able to get people in this deal, right, that never could have gotten a deal with me before. And it was simple. So they know up front what they're getting into. We had a thesis. They knew what they were going to get paid up front, right? We could deploy the capital right away. We knew all these things going into it, which made it easy. Then again, like I already said, the people that were like, I want to get in this, but I don't have actual cash. I sent them over to Horizon, got them in self-directed, and they ended up getting in. Greg and Stella both invested in this deal with me. They're both in my Mailbox Money Club, the one we're talking about. So what it did was it also created FOMO of a bunch of people who did not get in because we limited it at 750. We're like, when's the next one? When's the next one? When's the next one? Because we were able to market it, right? We were able to put it out there consistently and people saw it. So it provided a ton of benefit. And the flip side, for those of you that run a fund or maybe you're considering running a fund, um, from idea to when I got the capital, if that was a fund, the timeline would have been about double, right? Greg, or
Or
triple, right?
triple,
You were
or
laughing.
triple,
Yeah.
or triple.
Yeah,
Yeah.
double or triple in
Well, and
my
you would give them this 2-page summary,
right,
and then they'd give you back a 100-page fund document. What I
right,
like, which basically the other 98 pages tell you how the client could lose all their money, which I get.
right.
Like I like the liability, disclaimers and stuff or disclosures. But what I love about your Stella in the club is like, here's the 2 pages. Sure, there's a few disclaimers, but like this is the deal, and then you get to vote on it. Like, which I think is unique as well. Like that's very unique. It's so smooth.
Yeah, and Greg, to your comment earlier of when your attorney said, why don't you give me that box?" It's because they love to have guys like us that they can charge 20, 25, 30 grand for docs every time we want to do another fund or we've got another deal, right? So that's the cool thing about Stella's too, is the compliance thing that they do for you. And a lot of people don't realize this. If you've never done a fund like Greg and I have, you don't realize the compliance and the uphill battle it is to put all this together, right? And with the thing that was great about this is that's one of the things that Stella's team handles. So, as entrepreneurs, time is a factor. And from a speed standpoint, both Greg and Stella as an option to raise capital just gives your ability to execute. It shrinks the timeline and it just changes the game. And to Stella's point, the cool thing I like about it too is active participation. Everybody gets to vote. It just kind of changes the dynamic. Again, I still have funds and I'll still run funds, but there is a big like part of raising capital and getting people into deals, which my entire philosophy behind why I wanted to raise capital in the first place was when I understood money and I understood how many people don't have access to get into institutional quality investments because they don't have enough money to go to like, typically you got to go to Wall Street to the big guys. It was like, I want Main Street to be able to invest in this stuff, right? But the complexity of all the funds and stuff sometimes just doesn't make that possible. With fractional, it solved that. So once I understood it and I vetted it and we went through it, it was extremely exciting because it gave me the ability to get the Main Street investors in on deals with us. And it got me a whole different squad of investors that I didn't have prior.
I'd like to add to that too. Not so this is both plug and play. I've interacted with Fractional. Obviously, I know Horizon really well, but the plug and play part is it not only makes it simple and seamless for you, but it saves you so much money. Not just on the fund, but one
Mhm.
thing I think that's unique when I had my fund, our funds, you got a CFO. You're paying someone to do the bookkeeping, to do the
Yep.
administration. You got a secretary. So, and correct me if I'm wrong, fractional, when you come in, it's kind of done for you. Well, they take that over. So you don't have to hire all these people. Same with when I was raising money from IRAs, because the trust companies were so terrible, I hired two IRA specialists in my office to do all of their paperwork because they were so bad. And we would call and follow up on the money because they were so slow. And so
Yep.
again, from a Horizon Trust company perspective, when you have a client, you're going to lean on us. We're going to give you updates. We're going to give you emails on when clients' funds arrive, and we're going to hold your client's hand through the whole process. So you're not having to hire. You could be a one-man show, frankly, truly, and work with Horizon and getting the dollars there. Work with Fractional to make sure your company is all organized and administered correctly and legally. and go out and do onesie twosie deals or three or four deals or one huge deal. But you don't have to hire all these people, which I think there's a huge cost to that as well.
Yeah, exactly. So we, as fractional, we're taking care of everything legal, compliance, and back office. So, to Greg's point, right? It's like now you've raised the money, hopefully your projects are doing well. Well, there's still the side of, running your club, right? And even if you were doing a fund or a syndication, there's still a lot of admin and back office involved, right? Like whenever you have cash flow, well, you got to distribute it to all of your investors pro rata to their ownership, right? That means you or someone on your team is going to be cutting, 50, 100 checks, depending on how many investors you have, right? Like every single month. That is tedious. That is manual work that takes a really long time and, requires really tight, bookkeeping and financial accuracy, right? And then you got tax season, right? We're in the middle of that right now, and that's definitely not fun for anyone. You got to file taxes, you got to create K-1s for every single investor. Like that is definitely, a full-time CPA accounting team job. And that is something that we do in-house at Fractional for every single club. That really allows you to automate all the back office at scale without having to, bring in additional headcount to do all that. And, with all the SDIRA accounts that we work with, through Horizon, right? Like we know your investor, they invested through an SDRA. This is the account that they use. So we're going to send all the distributions back to the Horizon Trust account that they use and streamline all of that as well. So, you don't have to deal with any of that.
Yeah, so after I learned about this, when I went to my attorneys and asked for my money back, they wouldn't give it back. Guys, I mean, I think we've covered pretty well. I'd really like to open it up to questions if you guys are cool with that.
Let's do it. Jared's got his hand raised.
I've
Yeah, just
got,
go
I'm
ahead.
sorry right now because I have multiple questions. So for cost seg, bonus depreciation sharing, if all of this is coming from IRAs, right, they're not getting the benefits of that. So do you just take the benefits of the bonus depreciations and cost seg studies, or how does that work?
So it's a great
Ooh, good
question.
question.
Yeah, great question. So I've gone down this rabbit hole pretty deep. Stella and I have actually been talking about this. So I'm getting ready to launch two depreciation funds where the entire focus is we're going after assets, gas stations, car washes, RV parks with monster depreciation, and we're going to pass through the depreciation to the investors. So what I would tell you is for depreciation, there's a capital raising tip. There's a huge segment of people in the real estate industry that don't take advantage of this, and it's a huge place to invest money or to raise money from. So that group is not going to give you their self-directed IRA because they actually need the tax write-off. Does that make sense?
Correct. Yeah. But all right. So then,
Different.
Go ahead,
Well, go
Greg,
ahead.
jump in.
I just wanted to hit on, as far as let's say that your club, and again, I will preface this that, meet with your
Of course.
CPA and your own consultants, right? I am not a licensed CPA. But what I have seen a lot of individuals do is let's say that you raise $1 million and half of it comes from IRAs. You can allocate that other tax, that bonus depreciation to all of the other individuals. And so, or to you. Let's say the whole fund is, or fund, I shouldn't call it fund. The whole club is X dollars and they're all IRAs. So there's some really good tax opportunities that you should meet with your CPA on that I've seen people do the last couple of years.
Yeah,
okay.
and Jared, I'll tell you because I've gone down the rabbit hole in this. You know, again, not an attorney, not a CPA. I'm just telling you the advice I've gotten from multiple people is the tax distribution waterfall is one of the safest ways to do it is in fractional because everyone is active. So there's not a breakup of GP where that could be scrutinized by the IRS if you're following me on this.
Yeah, for sure.
And then well, I would tell you to Greg's point, if you do a special waterfall allocation on taxes, which you ultimately definitely can do, you just need to get someone who's really good at that. And we can refer you to Jeff Hyatt that does this that's in our network that's really good. So I'll give you a prime example. I'm buying a mobile home park right now where the main investor can't get any of the depreciation. So we're doing an allocation where we're getting 100% of the depreciation, even though he's putting up a majority of the capital. And we had to do a special allocation waterfall through Jeff's people of how to do it. So you definitely can do it. You just need somebody that understands it. However, what I've been told by multiple CPAs and tax attorneys and firms is the fractional doing depreciation through fractional is one of the safest ways to do it because everyone is considered active.
Okay, perfect. Now, is it only the self-directed IRAs within fractional, or can anybody come in?
Anybody
Anyone
come
can
in.
come in. Yep.
So anyone can come in. We're just talking about that as being a good pitch. So then if that's the case, if people want in outside of fractional, like I've raised, I don't know, 7 million in the last 12 months. So let's just say like that 12 million, I get 6 million more. Do I then tell them, hey, you need to enter into the fractional group for this next deal? Or do you have some in fractional and some outside of fractional? It sounds like if you're running everything on the back office, then all of those investors would then come into the fractional ecosystem on that deal. Is that correct?
You could. I mean, I'll let Stella answer that too. I mean, I'll tell you from my standpoint, I still run both, right?
Okay.
Like I still run both. There's going to
You
be
can
a
take a
lot of
million out of fractional and a million from fractional in the same deal.
yeah, absolutely you could.
Okay.
100% you could.
All righty. Perfect. And then how does it involve like all of the tick agreements and breakdowns and I mean just in general, right? I mean, like what if you're bringing in 1031 money and now you're bringing in IRA money and now you're bringing in cash money? Does it convolute and is there anybody that's like, hey, no, you guys can't y'all can't come in here?
So when you go into ticks and stuff, what I would just say is you got to get a really good attorney that structures that. And
Yeah.
then 1031's a whole different animal. I don't want to tell you no or yes because that's so nuanced to the deal, if that makes sense. But I'll tell you, like right now, I've got a deal that's got 1031 money in it. It's going to have fund money in it and fractional money in it. But I had to go to a really like killer attorney to structure it. Do you know what I mean?
Okay. Yeah, I do. I know exactly what you mean. What is
I mean,
fractional?
from the way you're talking, your level of understanding, you probably could figure this shit out.
Sure.
You know what I
Yeah, I mean,
mean?
I get this. I'm mainly just like, okay, if I can speed up this whole raising process,
And
then
that's what it
great.
does, and that's what it does, and that's what it will do. And then I think um, you have all kinds of options to get creative. And I don't want to answer it off the cuff because it's so nuanced when you get into ticks and when you get into 1031s. I think there's a way to back into all of it. And you
Okay.
think of it as fractional as just same with self-directed is just a tool in your tool belt that could be a really powerful one.
Okay. What is
Yeah, Jared,
fractional?
I'll just add on, to Brandon's point, right? And how he has both. I think that's the really powerful part is
Hmm.
you want the right tool for the right audience, right? Like
Yeah.
fractional is great if, marketing to your network is going to be a huge win and you have, significant capital from, unaccredited investors and you also have people that want to have a more active seat at the table, right? Like we know, especially for folks in multifamily, a lot of investors got burned in syndications and now, there's blood in the waters, right? They're lacking trust. And if you can offer them, a little bit more participation, more transparency, like that is actually I think a very differentiated pitch that can help you win compared to other operators out there, right? But, on the flip side, you might have institutional capital, family offices, and they want to be completely passive, right? And I think that's also a fair ask. But you can't have completely passive people that are not interested in voting at all in a club because then that would turn the club into a security, which is not compliant, right? So, I think there's the right tool for the right people, and that's why it's important to understand all the different possibilities here.
Jared, I would tell you 100% to get on Stella's calendar and talk to her and her team so you can dig deeper on this. Because I
Perfect.
think based on what I hear you're saying, this will definitely work for some of the stuff you're doing.
All right. Perfect. 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 What does fractional take?
Good question. So we make most of our money through a transaction fee, which is what your investors pay when they join the club. So the idea behind that is we don't believe in verbal commitments, right? People can tell you all sorts of things that they're going to invest, and then when it's time to wire the money, they, disappear out of, thin air. And what we ask for is when people join your club, they pay Fractional's 3% transaction fee for us to take care of all the legal, all the compliance. We do identity verification on all the investors, and then we also create the business banking account for the club. So that's what your investors pay when they join the club. And, people are happy to pay that because now they get access to your opportunities that they traditionally didn't have access to, right? So
Yeah.
that's what the investors are paying. And then for everything back office, so profit distributions, tax filings, K1s, that is 3,500 annually. I think it's very cheap compared to,
It's too
developing
cheap.
your own
Yeah,
in-house
you don't got
accounting
to
and
sell
all
me
that.
on that. That's good. I'm good. I'm good on all that. And then 3% is of whatever they fund in the fund. So if they put 100 grand in, it's 3%. If they put another 100 in later, and does each fund get set up for each property? Or you just keep a fund, a group. Sorry, we don't call them funds. Do you just keep a club open and then just keep hucking properties into it?
There's a ton of flexibility. So you can create a club that goes and deploys money across multiple deals, which is what Brandon did. And then some people just have one club that, deploys capital into one deal.
Okay.
Stella, do you
And
also
that's the
send
other
out the
thing
tax? Do you
too.
send out the tax forms every year?
Yeah, we do. March 15th every year. Never been late.
Yeah,
Is
Jared, that's one of the reasons why I like it is because of the flexibility. It gives you the ability to do a lot of cool stuff.
But if you bring outside dollars, then are you just responsible for doing all of your outside dollars and then fractionally acts as a holder for whatever it is? Like if 50% was raised outside of fractionally, then you do 50% of back end. I still do 50% of my people that came in outside of fractionally, it sounds like.
Yeah. Oh
Yeah.
yeah.
Okay. All right. I mean that all sounds simple when I think about it. Last question. I apologize when I started this because I told you we'll see if
No,
everybody
it's
else
good.
comes
It's
up
good
on
questions.
this number. I mean, this is what I do. So all right, so funds versus fractional versus like what I'm doing now, right? Like you actually even spooked me a little when you're like, hey, you can't go on Facebook, you can't do this, you can't do that. Because up until this point, I've got over 300 doors and I've just done it with people that have invested with me over the years in real estate and people that I've talked to and friends and family and connections. But I don't have a fund. Every single property is just a property with, an LLC set up and they have their ownership, but nothing's accredited. Nothing is, whatever. It is just people that know me that are like, yeah, I know what you're doing. Can I get in on this? I don't think I've done anything wrong. Maybe I have. You can tell me on a call if we set up a private call. But
Yeah,
my
we should probably take that one
yeah,
offline.
yeah, that's what I was saying. Yeah, that's what I was saying. If we're recording this or whatever, let's be
Yeah.
careful. But I guess what I'm asking is once it goes into fractional, this is my last question, I'll shut up.
Yeah.
Once it's in fractional, does it now become something that I have to be careful about who I tell the deal to outside of fractional, or does it actually make it easier, it sounds like, to just now just be able to blast the fractional out on everything that I'm doing to say, hey,
I think Jared, you need to get on a call with me and Stella. We can really help you.
done. All right, I'm
Yeah.
done. Thank
Yeah,
you.
Uh,
I
uh,
think we can really help you.
Before we
Perfect.
go to the next question, if there's any next questions, what I'll add to what Brandon you're saying here is we also have a couple links, and so for those most individuals that work with us that are raising dollars, we assign you someone on our team who really acts as part of your team to make sure that transition's super smooth. So by the time Jared, a client says I have a 401k, and yeah, can you tell me how to do all this? You don't have to be the expert. We'll give you a point person at Horizon Trust Company and so then you'll actually email that person and say, hey, this client, they're ready to talk to you about how the IRA process works. And let them do all the heavy lifting, how it works, how long it's been around, how simple it is, the paperwork. We'll fill out the paperwork for the client. So for those of you, and I know we're going to put it here in the chat too, for those that want to schedule an appointment with Stella's team or my team, feel free to do it or just reach out to us, obviously, and we'll schedule an appointment with our teams to get someone for you on the IRA side and then also with Stella's team on opening up the clubs.
And Jared, this is at Mailbox Money B on Instagram. Send me a DM, and then we'll get connected, and we definitely can help you dial this stuff in.
Perfect. Yeah, we've talked before. I'm just going to put you at the top.
Cool.
A few more
Yeah.
questions, looks like.
Great questions though.
Neil, you got your hand raised.
Hi there. Just a question about the different iterations of fractional investing. Is it does it create a security where it becomes scrutinized and regulated under the Securities and Exchange Commission?
It does not, Neil. So an investment club is not considered a security by the SEC. Our counsel is actually the senior counsel of the SEC. So as long as your investment club is active, which is what as a platform we're checking for, in compliance, it is not considered a security and it is not regulated by the SEC.
Okay. Does it fall under any SRO, self-regulated organization that monitors activity and how it's done?
Not under any specific organizations outside of, you obviously want to make sure it's actually compliant, there is active participation, and you're not turning an investment club into a
Right.
security. Yeah.
I see. Okay. All right. Thank you.
Yep.
Great questions. Who else? Unmute yourself if you got a question.
I saw one in the chat. I think one of our clients at Horizon. Do we have a live 2 day? No, but Brandon does, and I've been there, and so is Stella speaking as far as the details, diving deep into examples of how all these things work together. Further, like I do a lot of talking about like how do you talk to people with IRAs? How do you find those dollars? No, we don't. We don't open up our database. I wouldn't say our database, but our clients' information for anyone to market to. That's not something we do at Horizon Trust Company. But that being said, there are so many communities. When I said there's 105 million Americans that have IRAs, they are all around you in different real estate RIAs and different groups and communities. It's definitely worth looking at. But we will. Brandon has events that Stella and I both speak at. And if you're looking to learn more about, at a live event, I'm sure Brandon you could message Brandon. He can let you know. But I'm sure there's a lot more coming. This is new for Horizon and Fractional, so I'm excited to do a lot more with Fractional and all those that want to work in the different clubs at Horizon. So I'm sure you'll be seeing a lot more of us.
Stella, any parting words of wisdom?
Well, I saw Thomas ask for an example, so Brandon, I'm gonna drop yours in there again. And
Okay.
Thomas, if you go to Brandon's social media, you will see how he talks about his club. And I think Brandon, you do a phenomenal job as the marketing expert over here with just how much FOMO and excitement you put out there. And every time someone joins your club, I think this is genius. Like you put a highlight on who just joined, what's their background, why they're super smart, and for everyone that's watching, right? And clearly, there's so many eyeballs because they know that, you're raising money. They feel like they're missing out on something if they don't join. They're like, this smart person just joined the club. I got another reason to go check it out, and I don't want to miss out on something that smart people are doing. Then that's going to incentivize them to act even quicker. So yeah, definitely go to Brandon's socials. You will learn so many amazing marketing nuggets that lead to conversion, whether it's into your club, into your fund. It's all a sales funnel.
I would just do what he's doing. You don't have to wear the same shirts he's wearing, but you could. It will get you more views for sure. But what he does, what
You owe
Brandon
me a
does is
royalty check
genius.
if you wear a mailbox money shirt. Now, one thing I'll just say kind of in parting is this sometimes if you're new to this or you're venturing down this, it sounds more confusing and difficult than it really is. It's really not. You guys can reach out to me, reach out to Greg, reach out to Stella's team. We'll help you. Once this clicks and you figure it out, it literally changes the game for your ability to grow your real estate business. It's nowhere near as complicated as sometimes it can seem. Then once you get over the fear of being able to bring capital into a deal, your life just completely changes. So that's why we wanted to come on here and talk to you guys today to give you additional tools to build your businesses. You guys can reach out to all three of us to get some more help. So that's why we did this today. And we're here to help anybody that needs help beyond this to kind of help you grow and flourish in your real estate investment business.